Welcome back to Success with Steven. My name is Steven Smith, and today we're going to be talking about increasing your Capital One credit line 3x within 60 days. So the way that this video came about, I was speaking with someone during a one-on-one coaching, and they were talking about how they had a Capital One credit card, and they actually have a 750 credit score at this time, but their Capital One credit card has not changed. They don't get limit increases, or if they do get them, they've gotten like $100 and that's it. So I had the same issue with Capital One a couple years back, and I actually learned what was causing my Capital One credit card to actually keep a low limit. So I think that a lot of us have started with Capital One as we've been trying to rebuild our credit. And because we weren't able to get the limit increases that we desired, or as our credit actually went up, we weren't seeing our limit match, our progress. We start to think that Capital One was not a good financial institution, when in fact it's actually pretty good. So I had to explain to this person exactly what was wrong. And it was a huge moment, I think, once they realized what the issue was. Fast forward, I received an email from them the day before yesterday, and they were able to get a $30,000 limit for a Venture X credit card. I thought that was amazing. So I wanted to come here today, make this video, and I wanted to share this with you guys so you can learn how to 3x your Capital One credit card within 60 days. So I want to just talk about Capital One for a brief moment. Whether you're trying to rebuild your credit or your credit is excellent at this time, Capital One is a great financial institution to have on your credit profile. They are actually if not the largest, they are one of the largest subprime lenders that are available. So if you're trying to start off with credit for the first time, or you're rebuilding, this is one of the major institutions that will be very, very loose with giving you credit cards. Now, because they're very loose with giving you that credit card, I think this is where we get this misconception that Capital One may not be a good financial institution as we start to build our credit and go from having, bad to fair to excellent. And I'm going to explain to you why that is. So some of you may have heard of this and some of you may not have heard of this, but Capital One has a system called the bucket system. With the Capital One bucket system in place, it will prevent you from getting credit line increases based on the type of credit card that you're using with Capital One. And I'm going to give an example for you on their website in a moment. So you can have perfect payment history, a great credit score, and a relationship with Capital One for many years, and you'll get denied for a credit line increase. And they'll give you, if you're not denied, they'll give you like $100 increase every year. Now, what exactly is the bucketing system? So Capital One groups their clients into categories based on their credit score at the time of your application. So the thing is, if you applied for Capital One at the time that you were rebuilding your credit and you had a 580 credit score, let's say a year later, you've worked on your credit, you have a 750 credit score. Capital One is still going to put you in the original bucket that you were when you first started. So when you first started with Capital One, if you were a bad to fair or in the process of rebuilding credit card client, they're going to keep you within that same category, and they're not going to know that you actually improved your credit score. So these buckets are a representation of different levels of risk. Okay. Any Capital One credit card that you receive will fall into one of these predefined buckets. So you may fall under the bad bucket list, fair bucket list, good bucket list, or excellent bucket list. And let's go on to Capital One's website so I can give you an example of this. All right. So we're on the Capital One website right now. As you can see, we have the exact same Capital One Quicksilver card here. We have a secure Quicksilver where you have to provide a deposit in order to get this card. We have the Quicksilver Rewards 1 where you don't have to provide a deposit, which is for people with fair credit. We have people with good credit, the Quicksilver, and then we have the Quicksilver for people with excellent credit. Now, doesn't it seem weird that for the same exact credit card, we have 4 different products? Strange, right? Notice when you look at the rewards, There are no rewards for the secured, which is, it says fair, but it's kind of the bad category. It's no rewards. I'm sorry, it's no new member offers. You have no offers for the fair, but you have some offers for the good, which is you'll earn the usual rewards, but you'll have a 0% APR, and then you'll earn $200 cash bonus once you spend $500 on purchases combined within 3 months. So if you go ahead and you look at the different credit levels that you qualify for, as you notice, 0% APR, possibly lower APR here, you can tell what the differences are. No annual fee for the secured one. For the that's like the bad version. For the fair version, you have an annual fee of $39. For the good and excellent, no annual fee. So as you can see here, they separate each one of these based off of where you fall. And even though it looks like the same credit card product, you may not know that you're in a bucket where you're going to be capped based on your risk level. All right, so let's discuss more about what happens when you're bucketed by Capital One. So once approved for a Capital One card, that particular card will be placed in a bucket, and the maximum credit limit is set for life on that card. So if you start with a Capital One Quicksilver and you start in the bad or fair category, the bad one, you may never see a limit higher than 3,000. For the fair credit one, you may not see a limit higher than maybe, 5,000. For the excellent one, you may be capped out at 10,000 and maybe 30,000. For the good one, maybe 10. For the excellent, 30,000, maybe beyond. Maybe they'll offer you to upgrade to a Venture X or a different product, right? You are pretty much locked into your bucket from the moment you get that card. And this is still in part based on your credit. So for example, if you were applying for a Capital One using the pre-approval screen, your credit options may have been from the excellent category, which will ultimately result in you having a higher limit. If you were in the good category or fair category, that will also determine where your limit will stop at. And that will ultimately result in credit line increases being higher in the future. Now, on the opposite spectrum, if you start out with Capital One and your credit is fair or you're rebuilding, you'll be subject to lower limits and capped at smaller credit lines or denied, even if your credit improves in the future, even if you get an 800 credit score. So let's take a look at some more examples. So as you can see back on the Capital One website, there's credit levels: excellent, good, fair, and rebuilding. So if we go to excellent, you're of course going to see the Venture X, the regular Venture card, the Venture One. These are for excellent credit card clients or clients with excellent credit. You're going to see the Quicksilver excellent version. You'll see the Saver Rewards excellent version, and then you'll see the Walmart Rewards MasterCard, and then so on and so forth. And based off of what you get pre-qualified for, if it falls into one of these excellent categories, you can almost be assured that you're going to have a high limit when you start this account. Now, you can go to the good category. Same thing. There's a Venture One card for just good credit. So you'll kind of have an idea of what they might start you off for a credit line. Maybe it'll be 5,000, somewhere in that range. You have the good version of the Quicksilver, the good version of the Saver One, and then so on and so forth. There's even a good version of the Walmart Rewards MasterCard with Capital One. As you can see, when you get to the fair, you don't see the ventures even on here anymore. You see the Platinum MasterCard. You see the Quicksilver One card. You see the Saver One card. Your options start to actually change very much. And if you get to rebuilding, you really only have the Platinum secured, or they'll offer you the Quicksilver, the secured version of that one as well. So based off of what you get pre-qualified for, you can already kind of know what your limit's going to be. If you're rebuilding, it's probably 500. If you're fair, it's probably $1,000 to $1,500 maybe. If you're good, it may be anywhere between $3,000 to $5,000. If you're excellent, I've seen where it seems to be like $30,000 starting for some of the card types, like the Venture X with excellent credit. All right, so I'm sure some of you are wondering, why does Capital One use this system? Basically, it's Comet. And I just broke down exactly what that is. It's Capital One's multi-asset execution trust. Some people call it a MAT, M-A-T. It's a type of ABS. If you don't know what an ABS is, it is a security. It's a type of financial investment that's collateralized by an underlying pool of assets, usually one that generates a cash flow from debt, such as loans, leases, credit card balances, or receivables. So here's the thing. Banks get paid with interchange fees. The more that you use a card, the more money that institution makes. They also take these cards based off of the cash flow from debt on your credit cards, and they put it into these securities that people make money off of. But they have to put them in different tier levels based on risk. So when you're more of a risk to default, you have lower credit limits. That's basically it. So to put it simply, our credit cards are being used to make money and pay out investors. That's really as simple as it's going to be. So because there's different levels to this, the excellent ones, they give them higher limits. They make more money off of people with excellent credit when they use their credit card products. In turn, they give them more credit so they can spend more money, and they're known to pay back on time, so they're unlikely to default. They make more money off of people with excellent credit. They will give them more money to spend because of that fact. That's pretty much it. And now that you know this, you probably have an understanding of why this is happening to you and why your limit is being capped by Capital One. So again, if you're still asking, what does this have to do with credit limit increases? So again, the different bucket tiers being bundled as assets, okay, they determine how risky you are, i.e., how much limit you'll be approved for. And this system does not take into account how much your credit has improved over time, and thus your credit limit is capped. Even when you can have $30,000 like limits with a different bank, you're still going to have an $800 limit with Capital One. And, you know, unfortunately, this is the reason why, but there is a way for us to overcome that. Now, how would you know which bucket that you're currently in? You would check your initial limit. When you first got your Capital One credit card, it's a huge indication of what bucket that you're in. If your limit was anywhere between $500 to $1,000, you're more than likely in a low level bucket. So for example, the average limit of a Venture X credit card is around $30,000. So the average person who gets a Venture X average is $30,000. Another thing to note is most high-end customers, the one with excellent credits, they're able to get credit lines of up to credit line increases of up to $10,000 using manual increases, not automatic ones. They can also receive credit line increases upon card activation. So even when they initially get the card, they can submit a request to do a credit line increase and still get that increase fairly quickly. Now, if you want to know how to change the bucket that you're in, this is the answer. You have to sign up for a completely new Capital One card. So simply doing a product change into a new card won't necessarily remove your cap. Any card that you change into will have the same type of limiting issues as well. Here's another great tip. Before you sign up for Capital One, you can get pre-approved. First, check the limit that you can, potentially get pre-approved for, or the credit limit increase. If it's low, I would turn it down and check back again at a later time or when your credit limit has improved. Another tip is your credit limit is based on what your other credit cards are currently at. So if you have a credit card with, let's say, like Navy Federal, you could potentially, maybe if you're at 2,000, increase that card to 10,000. Navy Federal is known to do $8,000 limit increases, usually within the first 90 days. And then after that, 6 months. So if you get a credit line increase for, let's say, 8,000 on one credit card to where that credit limit is 10,000, it'll greatly improve the chances that when you apply for another card, they will try to match whatever your other limit is that they see that other banks gave you. So that's just one other tip that you could do. How are you going to get approved for a higher limit with Capital One? So here's the first step. You need to have good to excellent credit. That means you need to have a 680 plus. No collections, no charge-offs. I would recommend less than 2 hard inquiries. That's not a major factor, but I would recommend it. Your utilization must be low, at least below 5%. It doesn't have to be, but we're just saying if we want to make sure we are giving the greatest opportunity for the results that we want, 5% would be good. I would have a good credit mix, at least maybe 7 to 10 positive accounts that are reporting. And again, if you can do credit line increases on your other accounts, I recommend doing that as well. So you want to number 2, you want to ask for a credit line increase on all the other credit cards. You want to look at the limit that that other banks are approving you for. And again, that is going to be something that will determine what limits that they should offer you. So you want to be cognizant of everything else on your credit profile that will help you. And this doesn't just apply to Capital One. This applies to all credit card issuers. So someone who actually worked at FICO did state that a lot of times when you get these limit increases, it's based off of what you have with other institutions. So again, every time you swipe your card and banks make money from interchange fees, they are likely to want to give you more credit line. So the more you use your card, the better it's going to be. So you don't have to use like a majority of your limit. I've worked at 3 different banks. I've seen where some people have used that strategy where you try to almost, close to maxing out your card and then paying it off. You don't necessarily have to do that. I mean, I've seen people try that same thing. I'm not saying that it doesn't work. I think what would be more effective and not look as risky is if you just do multiple transactions. Again, banks make money from the interchange fee. Every time you use it, the merchant is paying for that. We don't know that. Well, I know that because I pay the fees from my businesses, but a lot of people who are, just the customers don't know that. They don't know about the interchange fees. So you make them money when you make transactions. They love that. Make transactions very often if you have a card where you're looking to get a credit limit increase. And then, of course, pay it down to 5%. So it shows that you're making a lot of transactions, but you're also responsible at the end of your closing cycle date, and you're only keeping 5% or less of your total credit limit. So number 4, you want to make sure that you apply for Capital One. For a Capital One card that is in the excellent or the good bucket. Okay. So if you try to get pre-approved and you're not pre-approved for a card in the excellent or the good bucket, I would just wait. Doesn't make sense. You might as well wait, because you already know if you fall into one of those other tiers, you're going to be capped. So it wouldn't do you any good. You would want to just wait. Always use the pre-approval option. It's always recommended because it doesn't impact your score, and it gives you the answer to your question. So even if you have good credit, but let's say they only offer you something, or you have excellent credit, and let's say that they offer you something in the good to fair option, take a look at your other credit cards. Look if your limit is very low. Try to do a credit line increase with all your institutions. If you've been paying on time, if you have a good relationship and you haven't asked for one, more than likely you'll get approved. Worst case, do a manual review with someone at the bank. Call them and ask them for that limit increase. All right, here's a credit line increase data point that can help you with not only Capital One, but most institutions. So your employment status, always choose employed. If you select self-employment, it can limit the amount of credit line that you will be approved for, since Capital One may consider this type of income to be unstable. You want to always say, because when you do a credit line increase with Capital One, they're going to ask you, how much will you spend on your credit card? Use 30%. Reason being, 30% is that recommended amount that you have. And you want to always do 30% of the available credit, because it shows that you're using a good amount of that card, but at the same time, you're not overly using it. So 30% of a $10,000 card, if you're asking for that limit, would be $3,000. So this amount should trigger an auto credit line increase without looking risky. The maximum desired line, I always go 20% higher than the actual line that I'm looking for. So worst case, Capital One will simply counter offer with a limit that I'm actually aiming for. All right. So recommended that you do it that way. If you want a credit line of 10,000, ask for 12,000, and then they may come back and counter you with 10,000, which is actually what you were aiming for. And when you are requesting a credit line increase, you want to choose the option, I expect higher expenses over the next few months. So that's letting them know that you expect to spend a little more, but you're not expecting to spend more than 30%. It's a very, very good option. And again, when you're submitting a credit line increase, you're going to see these exact options for Capital One. Select the options and of course, input them to fit whatever your criteria is. But you should do these options as such, according to your criteria based off of what's going on with you in your life. So to summarize everything, if you are currently a Capital One credit card holder and you have a Capital One Quicksilver or the Platinum card and you're capped out at a limit and you cannot get an increase, first thing you want to do, go to Capital One's website, get pre-approved. If they pre-approve you for, let's say, an excellent card, like an excellent Quicksilver or the Venture One or the Venture X, take that credit card option. You're likely to get a high limit. That is going to be your first credit limit increase. When you initially get the card, you can submit another credit line increase. I recommend trying that when you first get it. I even recommend trying to get $10,000 for that first increase. So if you're approved for, let's say, whichever one that you choose, if it's the Quicksilver Excellent, you're approved for 10,000. Try to request an increase of 10,000 so you can get 20,000. 31 days after that, request another credit line increase, another 10,000, using the criteria that we have here. If you are denied for that, wait 31 days and try again every 31 days for the credit line increase. Okay. If you do that, that would be your credit line increase 3 times, right? And that would be 3 times within a 60-day time frame. So you could potentially go from, 5,000 to maybe even going to 25 or 30,000, depending on the type of product. If it's an excellent product, you may easily be able to go to 30,000 and 3x your credit limit. If you are already a Capital One member currently at this time, and you already have let's say an excellent category credit card, when you submit your credit line increase, make sure that you submit a credit line increase for all of your other cards. And wait for them to report. They have to report the new credit line increase. Then use this same criteria, right? If you have maybe gotten a new job, if you're making more money, if you have a side job, you can actually see on Capital One that you can use that income to add to your current net income. So you can add that onto there and you can use that to raise how much you're making. That's another thing that you can also implement. Follow this same thing. You should receive a credit line increase, right? And you can request it again in 31 days. You can 2x your credit limit. Okay. Hopefully following this criteria and learning about this system has actually helped you, and you will see an increase in your credit limit with Capital One. Again, this information isn't just limited to Capital One. You can also apply this information to any financial institution. This will apply all across the board. If you have a card with Capital One, put your credit limit in the comments. Let me know if this video did help you increase your credit limit with Capital One, or if you just learned more about how credit limits work and things that institutions look for. Let me know if any of these things actually helped you to get a credit line increase. These things have helped me. Again, the person I had my one-on-one with, they got the Venture X at $30,000. I thought that was phenomenal. And I just wanted to make sure that I shared this information so other people would also learn maybe why they were being limited and, can really take advantage of Capital One as a financial institution. So again, thank you guys for your time. Thank you for watching this video. You guys have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we talk about all things financial literacy. And today we're going to be talking about the secret hack to get automatic Capital One credit card limit increases with no hard check. And that's going to be the easiest way that you can get this done. And this is not going to be referring to the bucketing system or anything like that. If you want more information on that, I'm going to link a video here. Now, I've said in a previous video that Capital One is one of the largest subprime lenders in the United States, meaning it's more than likely 75% of Americans that participate in credit building activity will more than likely have Capital One as a credit card issuer, if not at this moment, at some other point in time. And my recommendation is always having between 2 to 6 large financial institutions on your report. That can be Capital One, as well as Discover, American Express, just to name a few. But today, the focus of discussion is going to be this strategy to get the automatic increase on your Capital One credit card limit. So let's get right into this strategy and exactly how it's going to work for you. Now, the first thing that I want to talk about is something that I think is very underutilized, but there's a specific way that you should utilize this, and that's going to be updating your income. So updating your income can warrant a credit limit increase. So if you've recently job hopped and you've secured a higher salary, or you just haven't updated your income information in a while, this is a very simple step to help raise your credit card limit with Capital One, and a very easy way for them to do it automatically. You want to consider that the 2009 Credit Card Act requires issuers to assess the ability of each borrower to pay before issuing a credit card or issuing a credit limit increase. Since that act went into effect, issuers have been increasingly prompting customers to provide or update their income information. You've probably noticed this through emails or notifications via the app, but they will prompt you to update that information. Why? It will change your debt to income ratio. Credit card companies, they're growing increasingly sophisticated, and they are using data-based underwriting so that no one's actually looking at this. For the most part, it's all done by algorithms, and it's all done by patterns that are based on your spending habits. So they are using credit bureau information and other public sources in order to qualify you for new cards, credit line increases, so on and so forth. However, they are reliant on consumers for data related to income. Hence, they are reaching out to consumers so that they are updating it frequently across all channels. Keep in mind, you are not required to respond to an income update request unless you're applying for something and then it's asked. But if you don't provide that income update, it'll be more likely that you'll become ineligible for future automatic increases in the future. So I do want to say, when you're filling this out, and at the end of the video, I'm going to actually take you through the steps of how to do this credit line increase on the Capital One website or through the app. You want to make sure that you are not just putting a huge number for how much money you make. For example, if you make $50,000, do not just put that you make $150,000 because you think that that is going to increase your limit, because that's not how this works. And I'll explain more as we go on. What you want to do, which will make more sense, even if you make $100,000, my recommendation is that when you first get this account, if you didn't change it yet, put that you make 50,000, even if you make 100. As time goes on, you can gradually increase this whenever you want to get a credit limit increase. So you can gradually increase it to, say, you make 60,000, then 70,000, then 80,000, then 90,000, then 100,000. You want to leave yourself room for growth. If you just say the information up front, there will be no need for you to actually update your income. And then if you try to update your income to 150, 200,000, that's where you're going to be subject to sending in documentation like tax returns or paycheck stubs. You don't want that. So the next thing that we're going to be talking about is low utilization, maximum usage, and I'm going to explain exactly what that means. So your FICO score assesses your risk based on information on your credit report. An important factor is the category amounts owed, which is utilization. That's going to be roughly 30% of a typical person's FICO score. So for instance, if you have a credit limit that's $10,000 and you're carrying a $2,500 balance, your ratio for utilization is going to be 25% because 2,500 is 25% of 10,000. Now, experts advise maintaining a ratio below 30% for optimal credit health. That's not my recommendation. I personally recommend 10% or less, and you can test this out for yourself. Use 25% of your limit, see what happens to your score. Next month, drop it down to 10% or less, see what happens to your score. I can guarantee with full certainty, you'll notice that your score will go up. If you do that, and if you increase it to 25%, your score will go down. I can, almost guarantee that. In general, it's better to have more available credit and to use less of it. Some people ask, why does it make sense to have such a high limit on your credit cards? This is why a credit limit increase does help. Having a higher limit makes it easier for you to sustain lower utilization. I think people have it confused that they think just because they have a higher limit means that they need to spend more. If you are somehow equating higher limit to you're going to spend more, you need to change your mindset, because I'm not saying that. That makes no sense. Just because you have it doesn't mean to spend it. It just sounds like you may not be disciplined enough to handle that much credit line. And that's a totally different conversation. Now let's talk about what I mean by low utilization, but maximum usage. And again, while that may seem like a contradiction, it's what you need to do in order to get a credit line increase with Capital One. Most of the approvals with credit cards and limits, they've been automatic based on spending patterns and habits. Spending patterns and habits. Capital One is a big issuer that does this. Most of what they do is based off of systematic algorithms that just look at your behavior patterns and the way that you spend. You want to use a card frequently, meaning 10 to 15 transactions in a billing cycle, but you also want to make payments throughout. So an easy way to accomplish this is using your credit card to pay all of your bills. We all have bills that we have to pay every single month, right? Even if you have a low limit, let's say you have a $1,000 credit card or $500, but your light bill is $400. Well, you're going to pay the $400 on that credit card. Then you're going to pay the $400. Treat it like a debit card. As soon as you use it, pay it. And you're going to do this with gas. You stop at a gas station, you fill up your tank. Hey, as soon as you fill it up, go ahead and just pay it. Same way you would have with a debit card. Same thing with, all your other bills. You want to do this so on and so forth. But right before your billing cycle date closes, make sure you only leave a 10% balance left. Okay? If your limit is, $10,000, you want to leave $1,000 and that's it. You can do less, but you don't want to do any more than that, because that's what will get reported to the credit bureaus when the cycle date closes. 1,000 out of 10,000, and then so on and so forth. If you have 500, then 10% of that, $50. You get the drift, right? In that cycle, you've probably used your entire limit 3 to 4 times, which shows a high spend frequency as well as a high frequency of payment. But it also shows that you're responsible when it comes to paying your balances. This benefits you and Capital One in these two ways. They make money from interchange fees. The more you use your card, the more money they make off of you. Some people get really personal when they talk about banks and talk about they're not giving me this or that. You have to understand, all we're doing is putting information in places so that these systems will automatically do what we want them to do. No one's personally attacking you. No one's personally doing anything. This is a relationship that's mutually beneficial. That's it. You spend money with my cards at a high frequency. You pay me back. I make money off interchange fees. In turn, it's going to send a signal that I need a higher limit based off of my frequency of spend and frequency of payment, because I'm spending 3 or 4 times my limit and making 3 or 4 times the amount of payments. So the reason why they would want to raise your limit is because they use information based on consumer data. This is consumer data. The more your limit is, the higher your limit is, the more likely you are to spend. Since you've shown them that you're responsible, they're not going to mind doing that. These are all things that you want to keep in mind and things that you want to do. So, income, you want to update that maybe every 3 to 6 months or so. You also want to use the low utilization but maximum usage. That means frequent spend, so paying for something on the credit card, then paying it off immediately so that limit is available to you again. And then you want to keep that up as often as you possibly can in the cycle date. But right before the cycle date close, you only let 10% report. That is going to be the best thing that you can possibly do and will greatly increase the chance that you're going to see a credit limit increase on Capital One. But not just Capital One, this actually would apply with most of your other financial institutions. Just keep in mind, in general, it is better for you to have more available credit and to use less of it. Requesting a higher credit limit can lower your utilization ratio by providing you with more available credit, so long as you don't use the higher limit as an excuse to overspend. Okay? You never spend what you don't have, which is why I'm saying if you're going to spend something, pay a bill and then pay it right back. You'll never spend anything that you cannot pay back reasonably. Next strategy that you want to implement is raising other limits. Now, this is very important, and it was something that I learned in real time, but Capital One will look at the limits you're receiving from other banks to determine how much limit you should be approved for. I learned this when I got my secured card with Navy Federal. This is why you want to pick one bank that you can get very high limits with. Navy Federal, if you have a flagship credit card or you work your way up to it, you can start with the secured card, do a product change to a flagship when you get more than $5,000 for the limit, and then that card can go up to $80,000. Reason why I like that strategy is because you're going to keep this card so you won't have to open new accounts, shortening your account history. And because you get to raise that limit every so often, you can then use the limit increase from there to kind of go around and raise the others. So how I learned this was I got the Navy Federal secured card $200 limit. After about a year, I was able to graduate that to a $2,000 limit. I still had charge-offs on my credit report, but they still allowed me to increase that limit. When I got that limit increased to $2,000, I started getting credit limit increases automatically from my other cards. That was crazy to me. I'm like, oh, that's kind of interesting. Here's another thing that I recommend. Let's say you don't have Navy Federal. You can do something like Ava and Kickoff. These are both credit builder accounts that report as revolving balances, meaning they report to the bureaus as credit cards. Ava, for $35, you can get a revolving balance account, which is like a credit card, and it reports $3,500. Kickoff, you can get $2,500. So you can use both of these to then get credit limit increases, to then get increases with your other accounts. Now, I can't say for sure that Ava and Kickoff were the reason why I received that, credit limit increase and graduate, but doesn't hurt to have that. And what I'll say is if you do that and then you're able to get, to $10,000 on a card, then you can stop using the credit builders because now you have such a high limit on one of your accounts. You can then use this to get other cards and raise the limits on those cards as well. So just, take this into account. I just highly recommend that you start on this path and pick a card that's very, very easy for you to increase easily. And then you'll notice that it's easier to get that credit limit increase with Capital One automatically. Now, I do want to take you over to this Capital One page that's just showing you how to request a credit line increase. So when you sign into the Capital One homepage, you can go to account services, or you can go to the section with the gear that says I want to, and then you can go to account services, and then you can go right here to where it says request credit limit increase. And then I'm going to show you the information to fill out, and then we're going to discuss each section by line, just because I want to talk about the importance of it. Now, if we did everything prior, I believe that is the most likely way to trigger an automatic increase. But then I also want to talk to you very quickly about this manual increase and just what you want to do when you fill this out, because the way you fill it out can determine if you get approved or you get denied. All right, here is a screenshot, and I want to go over this line by line. So request credit line increase. Asking for an increase won't affect your credit score, and this is only if the automatic increase does not actually happen for you and you would like to take matters into your own hands. So I believe total annual income is the first line on here because I do believe it is the most important. If you have not updated yet, this is your opportunity to update. And remember what I said, if you make $100,000, when you go here, I recommend just gradually increasing where you started, just doing it a little bit at a time. Now, alimony, child support, or separate maintenance income need not be revealed if you do not choose to have it considered as a basis of repayment on this loan. If you have a spouse that you live with or even roommate, you can actually take their income into consideration and you can add it onto here if you would like to do that. My recommendation is that you increase this in increments so you do have room for growth over time. Now, employment status. I myself am self-employed. Here's my recommendation for this. If you put that you are retired or you put that you are self-employed, it will be seen as a higher risk. You will more than likely get denied or get a very small increase if you do this. Now, if you are a self-employed person, I have another video where I talk about how to actually employ yourself. And I do that, and I have my own paycheck stubs and I do my own payroll through ADP. I recommend checking that out. I was actually able to get a bonus for cashback. This let me know that I'm being recognized by my financial institution as an employee of the company that I own and operate. Now, occupation, you're just going to put whatever it is that you do. For your monthly mortgage or rent payment, there is a debt to income that you would want to look at, and just understand that your total income, your employment status, and your monthly mortgage or rent does say a lot about you, who you are, your debt to income, and they weigh a heavy factor in this approval process. You also want to put how much you plan to spend each month on this credit card. I would make sure that you put whatever it is that you actually plan to spend. Normally put 30% of whatever it is that my limit is. That way they know what I plan on spending. I put the maximum desired credit line. Again, I'm not going to tell you what you should put. I'm just going to tell you to put whatever it is that you would like to get. Now, if you put a very low limit, they can counter offer you with something lower. So for me personally, my strategy, I always put something a little bit higher. So that way, if they come down, that might be exactly where I want it to be. Now, why are you requesting a credit limit increase? This is also a line that I feel like is very important. I suggest that you choose the option that you planned on increasing your expenses over the next few months, or the option I believe is you foresee an extra increase in your spending over the next few months for something that's coming up. That's my recommendation that you choose for selecting the reason why you're doing this request. And it says, we're asking the question to help Capital One create a better customer solution in the future. It also lets them know that with this higher amount of money that you're making, you are expecting to spend more money over the next few months. I believe that will give them a better idea of why they should give you an increase on this particular credit line, and I believe that it will help your chances. Now, you'll submit this. It should be automatic. If not, you may get a decision where they may need more time to take a look at it. You can also call their reconsideration line if you're denied. My recommendation is looking at the letter, because they will tell you why, and based on whatever it is that you get on that letter, you can make an adjustment. Those letters really do tell you the reason why they're not able to do it. Pay attention to what it says, read it thoroughly, and make an adjustment based off of what it says. If it says anything about your credit report, you'll definitely want to look at that. And like if it says you have low limit accounts, that's going to let you know you need to increase the limit on your other accounts. If you have any derogatory marks, you need to remove those. We have plenty of videos on here about doing that. Just make sure that you read the letter and take into consideration whatever it is that Capital One is saying. Okay. All right. Thank you guys so much for watching this video. Please let me know if you used any of these strategies or implemented them on your Capital One credit line increase application, or if you did see an automatic increase after watching this video. I am going to link some other videos about Capital One that I've done in the past, especially if you want to know some information about the bucketing system. That is another reason why you may not be receiving a credit line increase. If you have a credit card like the Quicksilver or the Platinum, and at the time of applying for Capital One, you were just repairing or building your credit, that may answer the question as to why you were not able to get an automatic credit line increase. So I suggest checking that out. The cool part about that is there's information on how you can 3x your limit and actually get, go from something like a low 500 to maybe even 20,000, especially if you've improved your credit lately. So I definitely highly recommend that video. And if you have any other questions, please drop it in the comments below. Be more than happy to answer that for you. And again, thank you so much for watching this video, and you guys have a wonderful day.